Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the Pi Cycle Top Indicator. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Now, before we go too much into the analysis, credit where credit is due. This is not my indicator. It was, in fact, created by Philip Swift back in 2019. So, and I will link to his Twitter in the description below. One of the things that is often talked about when the price of Bitcoin is going up is the Pi cycle top. And essentially, if you're not familiar with it, the idea is that when these two, it's two moving averages, right? But it's the 111-day SMA and then 2 times the 350-day SMA. And the idea is that when they cross, it's within approximately 3 days of the market cycle top. Now, you might wonder, why are we talking about this right now, right? I mean, the price of Bitcoin has been going down. It's certainly not currently in some type of mania phase. We've seen the fear and greed index, as we just did a video on it yesterday. The market's pretty fearful. So why are we doing a video on it now? Well, there's a reason for that. I think, first of all, when I put out the videos during mania phases, it can be hard for, to sort of think about the market sometimes in a reasonable and rational way. And so, you know, views on things such as top indicators are not often well received. But I did a video on the Pi cycle top indicator. I think it was back in March, actually. I pulled it up. I think it was, around the March timeframe, where Bitcoin was sort of going on this mania phase, going into, about a 1 month before the halving. And I actually talked about the idea that it could repeat 2019. And I want to revisit that idea because there's something else that I mentioned in there that I think it makes sense to be on the lookout for this cycle. So, did that happen or did it not happen? And that's really what I want to cover. So, to start off, in 2019, there was a period going into rate cuts where Bitcoin kind of got ahead of itself, right? And it actually went above 2 times the 350-day SMA, just like it did here in 2024. And then shortly after doing that, it then pulled back to below the 111-day moving average. You see that? And you can see once it fell below the 111-day SMA durably and not just sort of a quick move below it, fell below it in September, it did not get back above it until January, right? So it was about 4 months later where it got back above it. And then, of course, we had a pandemic-induced recession, but it was about 4 months. Now, if you go to this time, you can see that we dropped below it in June, right? But then we got back above it. If 4 months from June, right, July, August, September, October, I've mentioned October could be the next time you get a at least a shot at trying to break the lower high structure. Or if you take it, say, 4 months from here, where it fell below it again, just from late July, early August, right? That's, really September, October, November, December. So it'd be kind of going into 2025. But one of the interesting things is how similar it looks to 2019, right? Where the price goes above the 2 times the longer moving average briefly and then fades below the shorter one, so that the shorter moving average does not cross the one above. The same thing happened in 2024, where had the parabolic rally continued and, people got what they were wanting for back then, and that was an immediate rally to 100K, we would have seen those moving averages cross. But in fact, they didn't, right? And the market cooled off just like it did in 2019. Now, there's something I mentioned, and it warrants revisiting. And essentially, it goes something like this. If you look at every time these moving averages have crossed before, you'll notice that the time frame of them crossing, right? How long the shorter moving average is above the longer one, how the amount of time that it takes has been decreasing, right? So back over here in 2013, and again, it's 2 times the longer moving average, not just that longer moving average, right? But if you look at it like this, you can see that, once it crossed, it stayed crossed for quite a while. And then here again, it crossed, and then, it didn't cross back until several months later. That was back in 2013. Now you go to 2017, and you see they crossed in December, and then they crossed back again in March, so a couple of months later. And then you look at 2021 and you see that they crossed, but then they almost immediately crossed back. What do you notice? The amount of time that they spend sort of in this inverted position, because normally the red line is below the green line, the amount of time where the red line is above the green line seems to be diminishing at each market cycle top or local top, like in the case of 2013. So because of that, does it not make sense to extrapolate that trend? And I've wondered about this for this cycle, because the last cycle, it barely happened. But if you divide these two moving averages, right? If you take the two moving averages and you divide them, you get something that looks like this. Now, you can imagine drawing an imaginary line through these peaks. And the question is, did the pi cycle top indicator go to where we think, or where I might think it could go, even if they don't end up crossing? And I know that's kind of hard to explain, but the point is that 1 here represents the moving averages crossing. And so you can see back in 2011, this ratio was like 1.5. And then in 2013, it was like 1.2, and then 1.2 again or so. And then in 2017, the ratio of these two was only about 1.07. And then in 2021, it just hit 1. So it raises the question, might this time the moving averages not cross? And it sort of begs, sort of says, well, am I suggesting this time is different? No, I'm not. I'm just saying that, what if the trend just is lower highs for the moving average division, meaning the amount of time that they spend crossing decreases? The problem is last time they barely made it, and we can see a diminishing peak on this. Therefore, the next peak might occur below 1, meaning there's a chance that it doesn't actually trigger this cycle if this trend were to continue. Now, I'd be happy if the trend of going above 1 continues where the moving averages actually cross. It would make it very simple. I just think it makes sense to be prepared for a scenario where they don't cross based on this trend that you can see. But it raises the question, did it go high enough to say that the trend is already complete? And when you look at it like this, and you sort of think about like an imaginary line going through here, it didn't really get up there to the spot where you would think, all right, that would be a reasonable spot, right? Because again, it went from 1.2 to 1.07 to 1. Here, it only went up to about, 0.73. That's a pretty big drop from one cycle to another. So for me, when I look at something like this does not scream, the mania that you saw in 2021 or 2017 or 2013, when there was a lot more social interest and Bitcoin really went in this parabolic rally. What it screams to me is 2019, right? Where they come close to crossing, but they don't actually cross. Now, you could get a market cycle peak, let's say in 2025, where they still don't actually cross. But if that is the case and they don't actually cross, based on this trend alone, you would expect them to at least come somewhat closer to crossing than what they did earlier this year. And of course, there's been a lot of discussion, is it a left translated peak? Is it a right translate? What is it? And my view on it is, as long as it's not broken, don't fix it, right? I mean, we've seen it happen many, many times. And, I got to be honest, guys, I'm still in the 2019 camp, right? That's the camp I'm in. I don't make any apologies for it. I've explained the reasoning many, many times. It's mostly based on my views about Bitcoin dominance. I think what we've seen happen this year is a repeat of what happened back over here in 2019. And so I don't think that even if you extrapolate this trend, I don't think this went high enough to justify what you might otherwise expect for this ratio to go to, even if it doesn't ultimately hit 1. Now, obviously, all models are wrong, some are useful, right? I mean, I'm not suggesting that any given model is going to tell you where the top exactly is. As I mentioned before, sometimes things happen in the economy and they change overall trends, right? You can go back and look at the financial crisis, for instance. I doubt there are many indicators, with the S&P that were calling for a 50% crash, right? So those things, I'm sure there were a lot of indicators back then that seemed rosy and then they ended up failing. So it's not like you can look at any indicator and with a clear conscience say, all right, well, this is what is going to help me out. I think it makes sense to use a lot of different indicators so that you can get some form of confluence between the different indicators. My only point is that if you were to look at this indicator in a vacuum, and you were to ask me, what is this peak the most similar to? I would say 2019. You could argue that the 2019 peak to this one is also a form of diminishing peaks, right? So you have from here to here, 2018 to 2021, and then you have 2019 to 2024. So diminishing in a QE bull market and then diminishing in a QT bull market. Does that make sense, right? Clear as mud, maybe? But that's what it looks like to me. It looks like the same as 2019. Does not look like 2021. Now, had the parabolic rally back then continued and had the moving averages gone up to, say, 0.9, that would have been a lot more concerning related to this specific metric. But it didn't make it there, right? It ultimately topped out here at around, 0.73. Kind of the same spot it topped out in 2019, right? It went up to like 0.77, 0.78. So again, a lot of similarities there. So I wanted to just talk about the Pi cycle top again, because it's one of those metrics where a lot of people only really talk about it when the market's going up, not when the market's going down. But in reality, it's when the market is going down. We know when cooler heads prevail, that's when it helps you hopefully make more informed decisions about how you want to actually navigate the cryptoverse. I imagine, back over here in March when I put this video out earlier, I imagine, it was a much more heated topic, right? If Bitcoin's going parabolic and then you put out a video called Pi Cycle Top, people are going to get upset, okay? If the market's going down and you put out a video called Pi Cycle Top, I think a little, people are probably more open to, all right, well, what does it actually say? What does it actually say rather than, stop just throwing FUD at the parabolic rally. So I think it's interesting to look at this. And, one thing to note in 2019 is that, we saw these moving averages sort of diverge, and then it actually bottomed out at around 0.4 to 0.5, around 0.45, 0.46 or so. Right now, it's at 0.6. But of course, these two moving averages look to be diverging more and more, right? I mean, as the price action for Bitcoin is trended down, these moving averages continue to diverge. So we will see if it does just end up repeating 2019. You can also make the comparison to 2016 and see that these moving averages came back down to right around this level right here in 2016 by the end of the halving year in November. That could also be something to look at. I think the main difference right now is that, in 2016, Bitcoin didn't really get that many closes below the 111-day SMA, but it got some. And you can also see that at one point it popped above 2 times the 350-day SMA, right? So you can see that. And it actually did it in June of 2016, right? June of 2016, it got above it, and then it came down below it for a brief period of time. If you look at it over here, you can see that, all right, it got above it, and then now it's back below it. So you could also make the comparison to 2016. And if you're going to make that comparison, then perhaps it just keeps, this moving average keeps on going down until the ratio is around 0.59. Again, right now it's at 0.619, about 0.62 or so. So a little bit more, it could easily get there. I mean, this was by the end of the halving year. This low here, the top on this metric was in September, and then the low on it occurred by May of the following year, right? May of the following year. So it took about 9 months or so. So this top right there was in June. So you're talking about like March of 2025 for this to bottom out. That doesn't mean that that takes that long for price to start going back up again, because over here, obviously, price had been going up again. But you can see that really going into all of that, while price did go up some, it was still sort of a macro downtrend until the final capitulation. So it is interesting to look at for sure. But those are my views, at least on the Pi cycle top indicator. And, we'll talk more about it maybe when the market's going back up again, whenever that might be, and see if the market is following it. But again, I mean, you can kind of see the similarities, right? I mean, in 2016, we got above it, and then we spent some time below it. In 2019, Bitcoin got above it, and then we spent a while below it. And then 2024, Bitcoin got above that green line, and then now it's spending some time below it. But anyways, we'll go ahead and wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, and I'll see you guys next time. Bye.